we're to go back kind of 2 or 3 weeks to when the Treasury first announced the notion of a bailout package, we've since seen central banks from around the world, primarily in Europe, move to A, guarantee the debt of their banks and also to take equity stakes in their banks. And that activity was followed by the Federal Reserve and the Treasury agreeing to do the same thing in terms of capital being injected directly to the banks. In Canada, we've had a similar sort of activity where the Bank of Canada has offered to buy $25 billion worth of current mortgages that are on bank balance sheets. Nothing to do with subprime, but simply to get those assets off the bank balance sheets and to create capital that can then be pushed out into the system. So every activity of any central bank really has been aimed at breaking the logjam in the credit markets, if you will, and creating a better capitalized financial or banking system so that banks will be able to get out there and lend to both consumers and businesses, small businesses in particular, neither of which has really happened yet. The other main thing that the Treasury in the States has done is set up a facility whereby they'll be offering to buy commercial paper directly from well-rated institutions. And commercial paper is another of the areas that has just been completely choked off over the course of the last 3 to 4 months, and again represents quite a positive step. The intended consequence of the bailout package wasn't to rescue mortgages or rescue homeowners. It was pure and simple to unthaw the credit markets. So create transparency amongst banks from a standpoint of what's on their balance sheet, start to reintroduce confidence that would allow them to lend to each other and break the cycle that we've gotten into where banks are essentially hoarding cash. I don't view it as a weakness of the rescue plan. I don't think that the rescue plan should necessarily be oriented towards bailing out individual homeowners. It should simply be setting the stage for an unfreezing of the credit markets so that commerce can get back to normal and credit can be extended to to whoever banks choose ideally, but ultimately not to people that are thus encouraged to do things that they shouldn't otherwise be doing. Absolutely nothing that has been announced in the last 3 weeks really has changed the individual or the collective response to the market. So we've seen incredible volatility continue. We've seen weakness in equity markets all over the world continue. And I think it's probably symptomatic of a couple of different things. I don't think the market realizes the extent to which the central banks have laid a groundwork for an unfreezing, if you will, of the credit markets. And to be fair, a number of the things, the rescue package, the commercial paper program, extension of the loan facilities, will all take time to implement. So it's not like you can basically flick a switch and have all these things just simply exist. But no, it has not broken the lack of confidence or the cycle that seems to exist both from individual and institutional investors at this stage, and it hasn't removed the panic selling or selling that's driven by necessity when there are margin calls and institutions in particular simply have to sell whatever is liquid. Nothing that's been done in the last 3 weeks has been able to mitigate that process at this stage.